manufacturing accounts. Okay, by the end of this lesson, students must know how to differentiate the direct and indirect costs, identify direct material, direct labor, prime cost, and factory overhead. And the third one, implement the work in progress into the manufacturing account. Okay. First, we see what is the difference between a normal trading business and also manufacturing business. Okay, what is trading business? Trading business, a business that buy the goods and sell. They don't change anything. They just buy and then they sell. Okay, this trading business normally will prepare two statements, which we already learned since year 10. Income statement and statement of financial position. Okay, these are the two statements the trading business prepare. I believe everybody know the format lah. Income statement and statement of financial position. But now we are going for manufacturing business. Okay, what is a manufacturing business? The companies buy raw material and convert them into the finished product. After that, they sell it. Okay, that's a manufacturing business. Okay, they do themselves and then they sell. Okay, trading business, they buy and then they sell. Manufacturing business, they buy the raw material. Okay, they will process, convert them into the finished product, and then they will sell to the market. Okay, so manufacturing business, there are one special accounts or statement will be there. Okay, for manufacturing business. Okay, they do have an income statement and statement of financial position as same. Okay, as trading business, but manufacturing account will have one special account called manufacturing account. Okay, I'll label this as manufac. Okay, we have a manufacturing account. It's a special account for only for the manufacturing business. Okay, now we see the element of the cost. Okay, for manufacturing, the element of the cost. Okay, before that, can we see the how they convert? Okay, example, this is the rubber. Okay, this is the rubber. The rubber can be convert into a tire. Okay, they convert the raw material, which is the rubber. They will convert to a finished product. Okay, that's called manufacturing lah. They do manufacturing here. Okay, now we want to know what are the costs involved to convert this raw material into the finished product. Okay, first we have a direct material. The direct material or the raw material are same. Raw material is the rubber. Okay, if you have a raw material, can we straight away convert to the finished product? No. Okay, we need some laborers, some workers to work on it. Okay, so we need to pay the salary to the workers. So the one we include under direct labor or direct wages. Okay, apart from a direct labor, direct wages, we do have direct expenses. Okay, one example of the direct expenses is royalty. Okay, you know what is royalty, right? Royalty is the payment that we pay for the pattern they design. Okay, example, this tire designed by someone, and then we need to, some companies we need to pay them a royalty. Okay, that particular royalty payment will become your direct expenses. Okay, you take a direct material plus with direct labor plus with the direct expenses, we will get prime costs. We call that prime cost. Prime means the main cost. Okay, after that, we take the prime cost plus with the factory overhead. What is factory overhead? Indirect expenses. Indirect expenses to the factory. Okay, direct material, direct labor, direct expenses are direct expenses that we need to pay whenever we run a manufacturing company. And we do have a factory overheads. Example of the factory overheads is maybe the rental of the factory, the supervisor salary. Okay, the direct labor is the worker who work on the manufacturing. Okay, who work on the product, is we call that direct labor. Okay, indirect labor, the supervisor, the accountant of the factory. Okay, all this we call that indirect wages or indirect labor. Okay, their salary will put under factory overhead. Okay, we plus that. After that, sometime not all company will have, but sometimes few companies will have WIP. Okay, what is WIP? Work in progress. We have a work in progress. What is work in progress? The work that partially done. Example, last year we have done partly. Okay, the balance work will done by during this year. So what we do is the last year's WIP will become our WIPO, work in progress opening. Okay, we will plus the work in progress opening and we will minus the work in progress closing, WIPC. Okay, why we minus the work in progress closing? Because the work haven't done. So it will be done next year. So we'll minus from this year's account, we'll plus in the following years lah. Okay, I repeat again: direct material plus direct labor plus direct expenses, we get a prime cost. Take a prime cost plus with factory overhead. If you have a WIPO, you plus, and if you have a WIPC, you minus. And then we'll get total cost. That total cost we'll call cost of the production. Total cost, okay, this is the formula to calculate cost of production. Direct material plus direct labor plus direct expenses, and plus with the direct overhead. Okay, we have a WIPO, we plus, WIPC, we minus, then we get cost of production. Okay, again, this is the element of the cost in detail. Okay, direct material, the keyword for direct material is a raw material, remember that. Okay, next one is direct labor. Direct labor or direct wages is we call the wages for the people who we pay to the people who making the goods. Okay, making the goods. Okay, direct expenses is the direct expenses, the expenses that related to the product indirectly lah. Okay, directly linked to the product, such as royalty or the fee that we pay to hire a special piece of equipment. Also, we call that direct expenses. Then the last one is factory overhead. Factory overhead is indirect expenses. All the factories indirect expenses we call factory overheads. Okay, example: rates, factory heat and light, factory machinery repairs, and the factory machinery depreciation. All this we call factory overhead.